Hi, this is James Shug with Westpac London's end of day report for Tuesday the 23rd of April. We had a very positive day on equity markets today. Earnings results in the US certainly helped things along. Travellers was one, Net Life was another, so that's two insurance companies both beating expectations. We've got Apple reporting after the close, so that's something to watch for. New home sales in the US, they rose 1.5% in March. Now there were some downward revisions to earlier figures, but the annualised pace of 417,000 is only 6.3% below the 5-year high point for sales, which we saw back in January. Well, they're still 70% below the all-time high back in July 2005, when sales peaked at an annualised pace of almost 1.4 million. As I say, they're running at just over 400,000 annualised now. The Richmond Fed Factory Index, however, it fell from 3 to -6 in April. Our forecast was -3. We were at the bottom of the range of forecasts, so it was even weaker than our most pessimistic forecast. Jobs, shipments and orders were all weaker in that survey. We had an interesting development in the business surveys for Europe. The PMI surveys showed an unchanged composite advance reading for the Eurozone at 46.5 in April, but the German PMI advance factory and services indices were both weaker. Services were back under 50 for the first month since November, in fact. France saw a small rise in both factory and services. The services index, in fact, rose from 41.3 to 44.1. It's still very soft, but with the German one down for services, the gap between Germany and France closed from 9.7 points back in March to just 5.1 points in April. Look, France has still got problems, but the gap between France and Germany has closed a bit. And disappointing that the German numbers were quite a bit weaker. I mean, Germany's been really the engine of growth in Europe, not in the fourth quarter, but looks like there won't be much of a bounce in the first quarter. Although these are numbers for April, of course, early part of the second quarter. Spain is looking at a 0.5% GDP contraction in the first quarter, according to the Bank of Spain's estimates published today. They're usually pretty close to the official data which come out on the 30th of April. That'll be the 7th consecutive quarter of the current recession in Spain. And UK business optimism was actually improved between January and April, although the latest industrial trends survey for the month of April showed orders quite a bit weaker. That was it in terms of the news today. So on markets, we've got the Dow at the moment at about 5:30 in London, up 1% at 14,716. The London market closed up 2% today. The French market up 3.6%. The Germans up almost 2.5%, and gains of just under and over 3% for Spain and Italy today. Peripheral bond yields in Europe have come in further too today, which helped markets along. In terms of commodity markets, copper's kept falling, down 1% today. Gold's off as well though, 0.6%, $1,412 an ounce, and oil's down about 0.2%, $89.06 a barrel. The Aussie dollar is off its lows for the day, but still down compared to yesterday. It's at 1.026 against the US dollar. We've got the Aussie CPI coming up Wednesday Australian time, and also the New Zealand monetary policy statement from the RBNZ, and of course a holiday on Thursday for Anzac Day in that part of the world. All right, that's it from me today. I'll be back again tomorrow.